All right, welcome everybody. Thanks for joining me. It looks like we're going to get this webcam working for just a bit, and excuse the look of my one eye there, some sort of bug bite or something. But you know what? This is live, and I'm going to soldier through it, and we'll turn that webcam off and just a bit later, so you don't have to stare at it. But nonetheless, it is live. I am real, and we're going to get started. So thanks for joining us, and let's go ahead and get the show on the road. We'll talk about our secret weapon for automated trading, diversifying your portfolio with this one special market that you've all heard about, but I don't think many of you are trading it, and I'll tell you why you need to be in that market. And we think we have a better idea compared to just picking stocks, and we're going to look at automation and even how to trade options using automation. And people always ask, so right up front, yes, you can do all of this within an IRA. So with that said, remember, we're speculating. We accept risk, and we try to make money by accepting risk. So take a look at the risk disclosure, please. It is important to read. All right, very good. Remember, all funds committed should be risk capital. Past performance is no guarantee of future results. So our goal today, we'll talk about technology experts are using, something you have never seen, how to diversify among global markets, and we can do this with bull, bear, and even flat market conditions. We're going to talk about two solutions: algo-driven systems trading. You might have heard a lot about algo trading, so we're going to talk about that. And then algo-generated option trades. I don't think many of you have ever heard about that, but we're going to show you how this all works and all the technology that we've developed over the years. We want you to be like this robot here, taking it easy, having the orders already placed and not struggling like this guy here. So stick with us, and I promise we'll get through a lot of material quickly. Hopefully you'll be a little bit entertained, but mostly informed and engaged. We'll have live demonstrations of these two solutions, and we'll have a special offer, something worth over $32,000. We'll show you how to get on board at an enormous discount and even for free, everyone's favorite word. So here we go, a little bit about us this week, what's happening in the markets, 3 trading secrets, algo trading. We'll have a live demo of the systems trading. Then we'll talk about options trading with algos and have a live demo there. And then we'll talk about our special offer and of course some FAQs. A lot of people ask questions throughout, and that's fine, but I think we'll answer a lot of them towards the end. And remember, again, this is available for self-directed IRAs. Just thought I'd point that out. People always ask. So a little bit here, we won't go into detail, but durable goods way exceeded expectations today, up 4.8%. Big jump in demand for cars, trucks. This is interesting. ExxonMobil out of the Dow after 92 years. Interesting. Home prices rising 4.3%. Big bump in home prices. I don't know what's going on. Maybe everyone's leaving the urban areas and buying homes in the suburbs. Something to say for that. Newly built homes surged 36%. Sales there are very strong. China trade optimism, you saw earlier this week, some headlines on that. And stock market started to move up. In fact, stock market seems to move up no matter what, right? You had COVID-19 treatment, emergency authorization from the FDA on some new treatments, fast tracking vaccines, so on and so forth. So here's the S&P 500 this week. Nice steady uptrend. No secret there. Thought I'd throw in gold just for the heck of it, and I'll tell you why a little bit more about some of these other markets, but well off those highs, but having a nice jump today. So the whole point of this is just to kind of give a background and point out one thing here. Markets are always correct and we aren't. It can be very expensive trying to convince the markets that you are correct. Remember, that's a great quote there from Ed Sequoia. Great book if you haven't read it, Market Wizard. So the moral of the story, don't fight the tape. And you want to trade the environment that the market offers. So don't fight prices, just try to work with them and strategize around them. So a little bit about us. There we are on the trading floor, some of my cohorts, colleagues, and myself. And that was a few years back. It does not look like that on the trading floor anymore. And that's partly, well, mostly all due to algo trading. So we're going to talk about that. So we are an introducing brokerage firm since 1997. We've been doing this for 23 years. So we have a lot of experience doing this. We're regulated with the NFA and CFTC. We're located in California and Illinois. And we've traded millions and millions of futures and options contracts over the years. So all of that experience we put into the technology we're going to talk about in just a brief moment. So we haven't necessarily failed. We just found thousands of ways that didn't work. So we like the way Edison viewed things, a little more optimistic. So all of that experience we're going to show you about why you don't want to be like this guy here, the mad scientist in the basement trying to figure out stock market movement. So use our help and the technology we've built, trading solutions built with experience, decades of development from industry veterans. And then who am I? I am Erik Gebhard, been doing this about 29 years, co-founder of AltaVest since 1991. I've been licensed and I have my BS in Business Administration from the University of Southern California. I got started with my interest, first learning about futures and options during an investments course. That's my textbook there. We were studying futures and options. I was actually quite fascinated by the whole thing. I took notes, one of the few classes, right? We can all relate to that. But we were looking at the Iraq invasion of Kuwait at the time. Crude oil had jumped, gold prices had jumped, oil fields were burning up, and we were looking at how the financial markets were moving. So that is how I got my interest started. I began in the mutual fund industry after graduation. I had my Series 6, 6 and 63 securities licenses, as well as insurance licensing. And then I thought futures and options were very, very fascinating. So I was able to get licensed in that industry, and I've been there ever since. So we're going to jump ahead to part 2, look at 3 trading secrets. And with that said, we're going to need more screen space, and you don't need to see my swollen or beat up looking eye. So let's go ahead and shut down that webcam for the moment. Okay, 3 trading secrets. Everyone's a day trader now. This isn't really a secret, but thought I'd throw it in here. Wall Street Journal, Barron's, everyone's talking about this. The under 40 set discovers day trading. It's sort of like, well, I don't know if it's a fad or a trend or just the in thing now. Day trading army, an army of day traders. Maybe you've heard of this guy, Dave Portnoy. I'd never heard of him until a few months ago, but he's entertaining. He'll broadcast live when he's trading. But he says just another 10% day guaranteed. So he always talks about how easy it is to day trade. And you know what? In this type of market condition, with everything going almost straight up almost every day, he's right. It has been easy if you've just been buying stocks, especially technology. And anyway, you get the picture. So, but you know what? Let's not be overly optimistic, folks. You probably have other things to do rather than sitting behind a screen. And if you're very successful doing it, that's fine. I'm not going to discourage you, but just remember this. It's very, very difficult to consistently day trade. Look at this here. Here's a gentleman who worked in a trading facility training people. He said there's basically a 3.5 to 4.5% success rate for people producing consistent profits over a period of several years. So that's day trading for you. Just thought I'd point that out. Stock trading, if you're trading stocks, that's fine. We all do it. But remember this, it takes precision. You have to be correct with all these things. Pick the market, direction, strategy, the timing of the entry, and the timing of the exit. So all that has to work. And remember that it's not easy to do. Look at this here. It turns out that this monkey here might be a better money manager than all of us. Some of these back tests they do just for kicks. Average monkey outperforms the index by an average of 1.7% per year since 1964 in these simulated stock picking contests. I always thought that's a lot of fun. All right. And remember this too. Forecasting is not easy because remember, you're competing with algos and robots. Robots are now outwitting humans on their investment picks. So I'm sure we've all been familiar with that. Someone's asking some questions about not being able to hear me, but I think everyone else is. So sorry if you can't hear me. Maybe check your settings on your end. Anyway, number 3, emotions become our own enemy, right? Maxwell Smart is perplexed. Trading can really, well, it can really tear apart your emotions, really. hope, fear, anxiety, greed, kind of that push me, pull you, become our own worst enemy. We've all been there. We have bad wiring. We have a built-in bias to make poor investment decisions. So really what he's saying here is we have a bias to sell the lows and buy the highs, and our brain is killing our returns. I think that's a great phrase. And look at this here. Talk about emotional. Robinhood traders getting stock education from TikTok influencers called rattlesnakes. This is fascinating. College students in their rooms, in their bedrooms, are influencing tens and hundreds of thousands of day traders. So talk about emotion. Look at the Motley Fool. There's 3 common biases when making investment decisions. And I think a lot of these recent day traders and young day traders probably are falling victim to all of these biases: confirmation bias, anchoring bias, recency bias. We won't go into all of it, but especially the recency bias. The last 6 months or so, the market's done nothing but sharply rally. So it's easy for people that have never done it to think it's just going to keep doing it forever and ever. This guy here says, my stocks are doing great. What else could I possibly need to know? Of course, he's got blinders on to the reality of the world around him. And then this guy here, it's a great piece for the tombstone. I still think the market was wrong. So you don't want to think like that and take that to your grave. Part 3, algos dominating 80% of the stock market, machines causing sharp drops and rallies. 80% of the institutional firms are in algo trading, according to Seeking Alpha. Revolutionary trading, I think that's what we call that. Here's where we are now. All the robots are trading. This is what it used to look like. This is a grainy little video I took years ago on the trading floor. I know I have more footage somewhere, but you get the idea. That was in New York. So looks chaotic, but actually it was very effective and very efficient, and just no longer the same. So here's what it looks like now. No emotions, they run automatically, built-in risk controls, profit controls. These are the machines. That's what's in the market. And reminded me of the Terminator. This quote from that movie when the character said, the Terminator is out there, it can't be bargained with, reasoned with, doesn't feel pity or remorse or fear. It will not stop ever until your account is dead. And of course, the green portion there is my embellishment, but you get the idea. And thought I'd throw that in there. So how can we use algos to compete? Well, let's see here. We have a solution for you: automated systems trading, user-friendly, filter for risk and reward parameters, as well as many, many other variables. You can do this in minutes a day, and everything is automated. You just set the switch off or on. If you turn the trade or system on, you just walk away, and the algo does everything else for you. Up markets, down markets, it doesn't matter. Markets, multiple sectors, absolutely available. So we're going to jump into a demo here with decades of experience. System developers have put this together and tested all of this, kind of like this test pilot here. So we've done all that work for you. And if you like what you see afterwards, we'll show you how to take action with that special offer we talked about. So AV Systems is what we're going to jump into, and we're going to jump into that demo. Give me just a moment to switch screens. And then you'll understand what I am talking about. So you are now looking at the homepage or the dashboard for AV Systems. This is an algo trading systems platform. Essentially, let's break this down. It's really simple. We're going to follow these steps here. We're going to show you how to explore or choose a system. How do you subscribe to one of those systems? Then how do you activate the system? And then once you've activated, how do you monitor that? So we'll just go through these 4 steps. And first of all, you'll notice you've got 25 systems here on this page. There's 1 through 25, over 1,800 available on the platform. And we're not going to, of course, go through all of them, but I'll show you how to make sense of all of it. So first thing you can do here is customize this table. So you see all the different headings here, and you can customize the appearance of this table. If you're not interested in some of these categories here, then maybe you want to add something else here, and you're not so interested in that, and maybe you're interested in the suggested capital, whatever it might be. Then you just click OK. And then of course that table reflects all of your choices. You can also do an ascending, descending sort. So you want to look at, in this case, the worst drawdown for any system. You can see here in ascending, descending order. If you want to look at your annualized return on investment here, 846%. Boy, that's a big one, you know, all the way down. You can sort it like that. I like to look at default, so we'll just go back to the default setting and leave well enough alone. But just want to point that out. You can organize that table any way you want. Now here's really the key to it is, well, first of all, I'll show you if you want to look at systems for just the NASDAQ. So you can do it that way. You can see NQ is the NASDAQ, and there's 159 to choose from. Or maybe gold. Remember we looked at a gold chart. So there's gold here. A lot of gold systems, 100 or 109, whatever it might be. And beyond that, here's really the best thing to do. Filter, and you can filter for systems that meet criteria that interest you, that meet your risk and reward really interest. So how about this? These are quick filters already set up for you. Tracked systems for more than 1 year and that have profits. So let's look at all the systems that have been tracked for more than a year with profits. Okay, so that's one filter you can see here, and has 498 to choose from. Now, how about this? Maybe it has clients. Let's look at all the systems that have actual clients trading them and required capital is less than $5,000 per system. So now you have 52 to choose from, just based on those two quick filters. So there you go. You can do an ascending, descending sort. You can see annualized return here. 143% is the best one. About flat is the worst one. So at least of those that meet those filter requirements. And we'll talk about required capital and all those numbers in just a second, but I just thought I would show you these quick filters. Now, there are advanced filters. So you can filter based on risk and reward, or a description of the type of market you're looking at, or even just the track record. So you can drill down and get very granular with being able to filter for systems that meet your criteria. So perhaps you're looking at something with a track record, a live track record since, let's just make up a date. How about August 9 of 2019, or let's just say 2018 even, till currently. And click OK. So you have 550 that meet that one criteria, that one advanced filter. Now you can see that the filter is right here, the one that you chose, and the dates. If you wanted to edit that, you could, or you clear it out, you could, or you could simply add more filters. So I will just randomly pick a few. Let's say we're looking at percentage of the time that this has an open position. Maybe you're looking for systems that are very active. So let's see what we get here. Some of these systems are always in the market. Yeah, 459. And perhaps you want to add, let's see here, the worst drawdown, or annualized return on investment, or whatever it might be. So maybe you're only looking for something that was no worse than minus 10% and maybe 100% gain. So you could click that and add that as a filter. You've got 435 to choose from. So you can get very granular, and let's look at the Sortino ratio. It's just a measure of risk-adjusted return. The higher, the better. Anything around, well, anything I think above 1 or something is usually quite good. Well, let's just say it's 5. I don't know what we're going to end up with here. 342 to choose from. So you can see how you can get very, very granular and really narrow it down to systems that meet your criteria for risk and reward and type of market. Maybe here's a good one. There are 2 types of systems, by the way, intraday and swing. Intraday, you're always out by the close, and swing, you might be in the market for days at a time. But let's say you're only looking for intraday systems. And after all those filters, we have one that meet all these criteria. So you can really, really narrow it down. Or let's go ahead and clear those all and go back to the default. So we're looking at everything. So I wanted just to show you how powerful this tool is to be able to filter for systems. Now here is the next question is, now that you've maybe filtered and you have a universe of systems that you're interested in looking at, and I'm going to click this here because these are favorites that I've saved before, and to make a favorite you just click on the star next to it, just like that. Now we'll go ahead and we are going to look at, for example, this system right here. So let's click on it. All right, there we go. Okay, so this is a good example. I haven't looked at this one with any detail, but this is how it works when you click on any particular system. You'll get this this performance sheet, or they call it a tear sheet. And let's look at it here. Here's the name of the developer. It trades the E-mini Dow contract. It's intraday, in and out on the same day. It's $95 a month, and that cost is deducted directly from your account. And I'll also point out that all of the performance numbers, percentages, are net of all cost. Everything is net of all cost, all trading cost, all licensing cost. So everything is net. And you can see here that the total profit and loss since September of 2018 here, doing very well. It's been on this platform, on the AV Systems platform, since April, and hasn't done a whole lot since going live. Had a drawdown, the worst drawdown is over $2,000. And I'll point out here, suggested capital and required capital. All of the performance data is also related to the suggested capital, not required capital. So keep that in mind too. And this is an important table here. You can see all of the details for the system. And if you want an icon, you click an icon and get all the granularity and all the explanation that you need. And what else can we point out here on this table? This is, I think, an important one to look at, worst drawdown. So this gives you an idea of how volatile it could be, at least historically. And some of these systems have small drawdowns, but maybe their gains are not as great, and others have larger drawdowns, and that could also mean that you have larger return potential. So higher risk, higher reward, as we've all grown to understand how that works. And this table is important. You can see the white background. That means this system has been back tested starting in September of 2018. And the results were very good that year. And also 2019, this system was also back tested. You can see another good year in terms of back tested results. And up through April, it was also back tested, but then it turns green. And that's when actual clients with real money started trading this system. And so when it turned green, you can see the key here, live trading. And that means there's real people with real money trading this system. So far, it's kind of flat after these 4 months. being an intraday system, it's probably getting not catching some of the bigger rallies because it's getting out by the close. But nonetheless, that's the way it is. Now I want to point out something. Now look at March. Remember the market dropped like a rock, but look at this. That's what happens with these systems. They're non-correlated oftentimes to what's happening in the market. So the market might be dropping like a rock or rallying strongly, and the system doesn't care. It's going to take long or short positions just as easily and get in and get out. So you can see all the history here for the month of March. You can see the accumulated profit and loss. It's having some really, really great days here during March as obviously the market was dropping. So it was catching a lot of those moves downward by being short. So that's why we like a lot of these systems, because they provide an absolute return or very much a non-correlated approach. Now, if you like this system and you wanted to trade it, you see this padlock here. You would click that and you would buy the license. And let's see how this works. So you want 1 unit, trades 1 contract. Every month your account is deducted $95 and then you would subscribe. Now, I don't know in this demo account I'm using if I even have enough demo money to do it, but let's show you one way or another how this works. So you accept the risk disclaimer and you accept, and there we go. So you've now purchased the license, and now your next step is to activate. So you would click activate. So now it's going to ask you if you want to immediately activate or activate on the next session. So we like to immediately activate. You would read the disclaimer, of course, and you want to accept the terms. And it's telling you here what the margin is, and currently it's flat, meaning it's not long or short. And let's see what happens. If I don't have enough money in the demo, it will tell me, and it won't let me activate the system, which is good. That way you can't activate 100 different systems without having the money to do so. And if I can, that's fine too, but we're going to show you what the next step is here. So let's go ahead and activate and see what happens. Yeah, someone was asking if we're going to do more than just talk about the automated systems. Yes, we're going to dive into options. So stick with us, folks. We've got a lot more. Okay, so there it says insufficient balance. So that's fine that you got to see that. That's what happens if you don't have enough money in the account. So there's risk controls in here. But let's say you did activate it. Well, where would you go next? Well, let's take a look at that. I will show you what to do. Remember, we talked about these 4 steps. We've explored, we subscribed. Now, how do you activate? What you would do is you go up to My Systems here. And this is where you would see all your live active systems. You can see I have 1 system here going in this demo account. And it's currently, let's walk you through this real quick. It's called Swing AG E-mini S&P ES. It's long 1 position. The closest order is a sell stop at 34.11 3/4. The last trade, it bought at 33.71 on August 16. And it's currently profitable by 105 points or $3,477. So today it's doing very well, $1,700 gain. And the accumulated gain on this particular system, since we activated it in this demo account, is 77.80 and moving. So moving target there. So you can see here that today's P&L and the accumulated P&L. You can watch it trading live. You can see the numbers flashing. Now, you can look at, for example, orders. If you want to see what the system is doing, it has a stop in place, a sell 1 at 34.11 3/4, then that's 65 points away from the current market. So everything is visible and granular. There's nothing hidden from you. You get to see exactly what the system is doing and where the orders are. Now, if you wanted to stop this for any reason, You simply click this here. You can add to the number of contracts you're trading, or you could simply stop the strategy. So it will ask you if you want to stop it immediately or simply not take the next entry signal after the current position is closed. So we're going to go ahead and just leave this, leave it active. And that's how you would essentially do this. And if you want to take a look at this particular system, you just click on the link and let's take a look at how this one is doing. You can see here, this had a huge March as well. Once again, when volatility spikes, these systems can do very well and capitalize on that movement. You can see how any month performed just by clicking on it. Don't need to go into all the detail, but since April, this has been traded with live money. Actually, we have a lot of clients in this right now that got in April. They're doing well, and if you want more detail on any of the systems, you can click on the trade log tab here, and you can see all of the trades that this system has made, or you can look at it day by day or per session. So you can see here how many were traded at the end of the day, what was the position, short one or long one, so on and so forth. So everything is visible, nothing is hidden. Oh, and some people ask, can you download the data? Yes, you can download to Excel if you would like. All right, very good. So that is a quick walkthrough, and I'm going to show you one other thing and how powerful this platform is. A lot of fun too, but here's the top 10. So on any given moment, you can look at the top 10, and here are the top 10 systems currently. Right now, they're all NASDAQ systems that are doing the best today. That makes sense because the NASDAQ was up, what, 2% since I last looked. And these positions are all long. They're all long from this particular price. It tells you what the nearest order is. This has a sell limit. It's trying to take profits here at this price. Here's a sell stop, so on and so forth. We could click on any one of them. So you can see the details on it. So here we have live trading in this one here since May, doing well. Another good year month here in March, and actually a very, very good year. So you get the idea. And I also want to point out something as well. We've focused lately on these the NASDAQ or the Dow or the E-mini, but keep in mind, well, here I'll point out this previous session, the NASDAQ systems were doing well. Last month, you had silver, NASDAQ, the DAX, that's a German stock market, the E-mini S&P last year, NASDAQ, so on and so forth. See, the stock index futures seem to do very well with these systems, and that's because of the volume and the liquidity and so forth. But you should also know that there are systems for crude oil. I think we saw, yeah, crude oil. Here is corn. Markets maybe you never thought in a million years you would trade. Here is the euro currency, you name it. Silver, obviously we saw that. Here's, I don't know, let's take a look at this real quick and then we'll move on because I have something really, really interesting to show you. Even I think some people are really interested in this next section here, but here's an example of the silver system, fairly new, big month in March and doing well. Wow, August so far, I mean, just really having a great month. But as with anything, this past performance does not guarantee future results. And also keep in mind that any system that has big return numbers probably is going to have more risk as well. Now, with that said, let me hop over and switch screens here, and we're going to show you the one market that we should trade. We're getting to that right now. Thanks for the question. Absolutely. So let me Okay, so hopefully we don't feel like this kid drinking from the fire hose. Now, you're thinking this is all great, but really I've never traded futures and, it's probably not for me. Well, keep in mind, folks, that it doesn't matter if you've never traded any of these markets because the algos do everything for you. Remember, we talked about the yen or the Dow or the gold or copper or bonds or the NASDAQ or crude oil. Algos trade everything, they do all the work. So precious metals, energy markets, stock market indices, currencies, absolutely. And now look at this, futures volume, 21.9 billion contracts first half of this year. Almost 22 billion contracts, over almost a third increase in volume. They're global, deeply liquid, transparent. There's leverage, diversification. You go easily short or long, and they're cost effective. So AV systems, you saw you can filter for risk, profit, capital, whatever you need. AV systems, we like this picture. This guy here is having fun. We think it's a lot of fun, but very, very powerful. Now here, we're going to talk about the market that you need to trade and options. So here we go. This one market using automated options technology for up, down, or even sideways markets. We have a secret strategy to show you as well. We're going to remove the guesswork and do it in a minute today. We'll talk about the advantages of futures, stock indexes, and options. And remember, we can speculate or hedge. Doesn't matter if the market's up or down or sideways. We have strategies and technology for all that. So we're going to talk about stock index futures. And here's the ES. What's the ES? I'll show you in just a second, but they're convenient to follow just an index or two, and they're also less volatile than individual stocks. Here's an example, Kodak, down around $2 or $3 or $4, and a couple days later it's at $60. And now we're back down to 6 or 7. I mean, just crazy. So here's the one market, the ES, the E-mini S&P 500. It's liquid, it's efficient, and it's cost effective. And let me show you what I mean. Look at this, average daily volume over 780,000. So the only market bigger are euro dollars, interest rate, financials, and just a enormously, enormously large market growing by leaps and bounds. Now let's talk about insurance companies real quickly. You know how they make money. You pay them premiums and they are paid to assume and manage risk. They sell and manage time. They insure themselves by hedging. They're consistent and they're patient. And they look at probabilities, the favorable long-term odds. And we're going to show you more about the ES and going to dive in a little bit deeper actually in just a minute. But I want to show you some of the, you're all aware of the mathematical statistics and expected returns that, insurance companies use, just like casinos. They're the house. And for example, if you spin that roulette wheel, you're going to lose $200 if you spin that wheel 38 times, an average of 526 per spin. So that's the house edge. Your losses become their edge. And they do this even though that they know at times they will pay out winnings. So that's the law of large numbers. You flip a coin 10 times, you might get 10 heads. You flip it 10,000 times, you're probably going to get 50-50 heads and tails. So just repeatable trials. So we want to look at probabilities when we're trading with options, higher probability option strategies. Using that baseball analogy, we look at base hits by selling or going short options. We're consistent, we're patient, we manage risk. We know that we will have losing trades, but we also manage reward. We don't want to be greedy, and we need the proper technology and the tools to really make this happen. Remember, base hits, not swinging for the grand slam. So short option strategies, they can be non-directional and bullish and bearish, and they have higher probability outcomes with predetermined risk. So that's what we're going to talk about. Credit spreads. If you know this, that's fine. It goes quickly. And if you don't, it's easy. So just follow along. Credit spreads where you collect premiums. That means your position is insured. The way we do it, predetermined risk and reward. And they may be non-directional in nature. So they have a margin of error when you're trading these credit spreads, and I'm going to explain this chart in just a second. So you can see the market moving along here, moving upwards, and you have this large margin of error on that spread. But first of all, the Greeks, I'll go through this quickly, but it is important. Just two of them, the delta. What the heck am I talking about? Well, let's look. Let's say the S&P mini is at 3,500. Here's a 3150 put at 15 points. The delta is 0.25. How about that December contract drops to 3490? So what happens to the value of this put? It was 15. Well, it gains 25% because of the 0.25 delta, and now it's 18 3/4. Now here's really the secret to delta is it's the approximate probability of expiring in the money. So that means there's a 25% chance of expiring in the money, 75% chance of expiring worthless. So that delta number is always moving up and down, and you never have to figure it out. It's always given to you. So, and it is not the probability of a winning trade. So keep that in mind as well. And let's look at theta. That means sensitivity to time. Remember, options are a wasting or a decaying asset. They have limited life. So theta is a negative number equaling 1 day of time decay. So what am I talking about? So if an option's at 10 points and theta is negative 0.05, that means 1 day of time elapses on the next day, and then the premium's 9.95. The next day after that, 9.90, and so forth. So that's how it looks on a graph. As you get closer and closer to time zero, the theta decay starts to work more and more rapidly. And that's how that works. So let's look at an example of a call spread. You're selling a call spread. You sell a 35.30 call, you collect 4.5 points, and you buy a 35.50 call, and you pay out 2.25, and the net you collect is $112.50 minus your commissions. And how would you know which options to sell and buy and at what price? Well, I will show you in just a second. Here's selling a put spread. You sell the 29.90 put, you collect 3 points, you put that in your pocket, but you also buy the 29.70, you pay out a point, but the net result is you collect $100 minus the $50, minus your, it's $50 a point on the E-mini S&P 500. So there you have it. So remember, no naked options. Everything we're talking about, these are covered. All these option spreads are covered options. Maximum risk, and your risk is capped. These are covered spreads, no naked options, sorry animals, and we're only doing covered options. And the big benefit to that is no margin calls and there's no unlimited risk. You know in advance what your exposure is. Now here's an iron condor. It's just a combination of the put and call spread. It's a crazy name, but this is what it looks like. In this case, the S&P 500 moving along, you sell a call spread above the market and a put spread below the market. And we're going to show you that in just a second. Now here is a strategy you've never heard of. It's called a dragonfly. 6 legs or 6 different options that we're trading, and it's a variation on a condor. So here we have, you can see the calls and the puts on this dragonfly. And let me explain here what's happening. So you sell 4 of these 33.30 calls, and you simultaneously buy 3 of the further out of the money calls, and you buy 1 closer to the money call. The one you buy in this case is 40 points closer to the ones that you sold. So this option that you own, being that much closer to the money, is going to gain in value more quickly and lose value less so, and lose time decay less rapidly than the calls that you sold. And you do the same structure on the puts on the bottom side. And I'm going to show you some trades on how that works. Now here's just, for example, you can do bearish strategies too, something we call a bear hedge. You sell an out of the money call spread, you take the money from that and the money you collected and you buy an out of the money put spread. And same thing with the opposite, a bull hedge. You buy an out of the money call spread, and to pay for it, you sell an out of the money put spread. So the question people always have is, this seems boring. Yeah, it can be, but it can also, of course, markets can make big moves and you have to be prepared. So the whole goal is to sell these out of the money spreads and watch time pass, but how? So here's Jackie Chan confused. Where to start, what to sell, what to buy, what price, how do you know when? How do you manage risk and profits? So here we go, folks, the drum roll. Theta Trader. These are pre-built credit and debit spreads. And we have a proprietary algorithm that creates what we call theta trades, same strategies that we just looked at, sophisticated strategies and trades that traders are using, bull, bear, and flat market conditions. Now this is key. We automate risk and profit. So you can automate your risk and profit controls. I'll show you how to do that. So we're going to show you how to run through the demo and then take action when we're done. So let me go ahead and switch over. All right, wanted to make sure we're looking at the same screen, and we are. Very good. So you're looking at the dashboard for Theta Trader. This is our options trading technology, and I will walk you through how this works. It's real easy. You've got what we call our Theta trades up here, and I'll show you that in a second. These are open short positions, any open sold spreads, and any long or bought spreads. Then you have your account info here and any current price quote. So this is just a demo account. Let's go ahead and start at the top. You can see there are bullish strategies that are pre-populated, bearish and neutral. And we're looking at primarily three markets: the E-mini S&P 500, the NASDAQ mini, and the Russell 2000 mini. And because we looked at some of these condors and dragonflies, that's where we're going to focus. Let's look at a condor. You can see the proprietary algorithm has pre-built the spread for us. So let's drill down on that. And let me do this if this might help. Does that help you see the screen? Okay. Let me go back real quickly just to show you what I did there. So you just click here and you can choose from these two different expirations. The algorithm has chosen which strike prices and which expirations to trade. And the first thing I like to do is look at a chart. Okay, this gives an example of the call spread you're selling and the put spread that you're selling. So you go back here, you can see all the details, the settlement price of $1.95, the net premium, your maximum put, call risk, commission, your capital. Here's the cash required to place the trade, and here's your profit potential, targeted return on cash. That's what that means. If you need to know what anything means, there's a key for that, or you can just hover the mouse. Probably doesn't work because I've exploded the screen here, but that's okay, or magnified it. Then your targeted annualized return, that number there is used to compare one trade to another. But let's look at this. You're selling the 3060 put and the 3670 call, and then you buy the 3040 and 3690 put and call. So why, here's the question I get. People say, okay, I have to put up $900 approximately, and my profit potential is only $70. Why would I do that? Well, we talked about higher probability outcomes, higher probability trading, and those deltas, remember? So the put that you're selling, the 3060 put, has a delta of 9.76. So that means there's over a 90% probability, according to that delta, that this option would expire out of the money. And how about the calls? Same thing, 6.74 delta. So you're looking 93% plus probability that the calls you're selling are going to expire out of the money. So these are the higher probability outcomes that we like to work with when we're selling and collecting option premium. You can see it's already pre-populated to sell. You're selling the condor, meaning you want to collect a net premium. Pre-populates there to really a quantity of one, but you can do anything you want. Let's just say we're doing 4 of those. You can notice the cash required changes, your profit potential changes, and so on. And you go ahead and use that button to place the trade. And there it is, right here, selling at 195. Now, let me squeeze this down. I think it's a little bit big. Okay, so now let's go back to the dashboard. I'm going to show you a really, really interesting feature here. Under trading, there's a trade simulator. And now we're going to run through some simulations. I've loaded a few. At least I think I did. Hopefully I did this correctly. Okay, so here's a condor from August 14, 2017. And you can use these buttons Let me squeeze this down a little bit. To move forward day by day, or you can jump right to the end. But let's just go ahead and move forward, or you can go play. And you can see here, as you move forward day by day, you can see here the trade, the P&L negative, now it turns positive, and this green, I'll explain these colors in just a second. But let's go ahead and play this out. So you can see the P&L, it's turning positive, green, and this RTI column is green, and that means basically good, do nothing, like a traffic signal. Okay, it turns blue. What is blue? Blue is take profits. The algorithm says this is the time to take profits, and you can automate this. You don't have to watch the screen. You don't have to log in or do anything. You can use Theta Trader to automate it so that once you have a trade placed, it'll monitor your position and then automatically place that order for you to close out that position when you get the blue profit taking signal. Now, I want to point out something, why automation is important. A lot of times, we have emotions as humans, and we might think, you know what, I'm just going to hang in that trade, even though I've captured 70% plus of my total profit potential. The market's kind of quiet, and I just want to get every last drop of profit. So you ignore the profit signal, and you just sit in that position, and let's see what happens. Now the market's running a little higher and getting close to that upper boundary or the call that you sold. And now you see it turns yellow. And now you see the P&L starts turning red, going from positive to negative. Yellow is elevated risk. Turns yellow again, getting closer. And then it turns red. And red is the line in the sand, the proverbial red line in the sand. Too much risk, get out. And so if you would have abandoned or ignored your profit taking signal or didn't have it automated, you could have taken a winning trade and easily turned it into a loser. So we want to avoid that. That's why we automate things. Now let's look at another condor. We're going to run through this one here. Turns yellow, slightly elevated risk, and then it turns red. Get out, you lost money. Theta Trader says it's too much risk, get out. So remember here, this trade was January 2 of this year, and that's with a condor. So what happens if on January 2, you placed a dragonfly instead of a condor? Well, let's take a look. Slightly elevated risk, just like we saw with the condor. And then it turns blue. You have a profit signal. You have an opportunity to take profits here on February 21st. And on February 21st, if you were trading that condor, you were not at a profit signal, you were just green. So the dragonfly gives you sometimes an opportunity to take profits much earlier or period. And let me show you how that works on the dashboard, and I'll show you a couple more dragonflies. Here's the dragonfly. We'll look at this October into month. And let's look at the graph. Here's what it looks like. You're selling the 38 calls and you're buying a 37.50 call. So in this case, the algo says the one that you buy is 50 points closer to the money. And the same thing goes with the puts that you're selling and the one closer to the money put you're buying. So that's what it looks like. And you'll notice here the cash required is higher than a condor because you're selling in increments of 4 calls and 4 puts. So $4,400, profit potential 336. Your targeted return on cash is a little bit lower compared to the condor, and that's because you pay money to buy this call and this put, and those are closer to the money, so those cost you money. You give up some of your profit potential to basically ensure your position a little bit more compared to a condor, but it does have the same delta. So you're looking at that same delta on the puts that you sell and the same delta on the calls that you sell. You're looking for those higher probability outcomes. Once again, you pre-populate to a sell. You could do a quantity of 2. It changes your capital required. Selling at a price of 840. Let's go ahead and place that. And there it is, just assumed you're filled in the demo account. But let me run through another simulation for you. Here's a condor. This is from November 20. Okay, so look what happens here. This condor went deeply negative, and you see it's here on January 16. That's your signal to get out. Don't worry about, of course, what happens afterwards. That's all hindsight. Turns out, had you done nothing, the trade would have worked out. But that's not the that's not the point we're trying to make. Let me show you the point we're making. So that was January 16. You had a signal to get out, too much risk. So here's the dragonfly. And let's run through the dragonfly. Look at this. On January 3, you have profit-taking signals beginning to take profit. The trade is more than 100% profitable. How could it be more than 100% profitable? You're getting paid to close this trade out. That's because, remember, you are long. You bought this 32.90 call. So it's gaining in value at a more rapid rate than the ones that you sold that are further out of the money. So you can see here a big difference had you placed this dragonfly trade. You compare it to, or the condor, I'm sorry, and you compare it to the dragonfly, that same trade. You'll notice how the dragonfly acts totally differently, completely different behavior. And that's really the point I want to make. We don't only do dragonflies, but we tend to, I guess, prefer them a lot of times. There's nothing wrong with the condor. We do those as well. But the dragonfly is oftentimes more robust and has a different risk reward characteristic. But you sacrifice a little bit of gain when you're trading the dragonfly. Now, here's something else. We talked briefly about the bull hedge and the bear hedge in the presentation before we went to the demo. And let's, I don't know, we're looking at a bear hedge on the NASDAQ. Let's say you don't think the NASDAQ can keep, going up 2% every day forever, and you want to put a bear hedge in place. You could do something like this. Here's what the graph looks like. You sell this out of the money call spread, the 13,000 call spread, and you buy this out of the money put spread with the money that you received. And you can see the strike prices here. Theta Trader builds the trade for you, and all you do is place the order. So there you have the this NASDAQ bear hedge, and let's look at that, how that works real quickly. Here's an example from last year. Just threw one up here in the demo simulator. Don't worry about the colors so much because they kind of have an opposite. But nonetheless, here you go. You place the trade, you're losing $21. You end up making $7.59 by the time this trade ends here in this simulation. You sold the call spread, you bought the put spread, and of course the put spread gains money. Looks like it's settled in the money here. So that's how that works on the bear hedge. And let me show you here on the dashboard. You can look at your open positions on the dashboard, short positions, long positions, or you can go to your open position page here. And here are the open positions. in this demo account. Let me squeeze this down. So you can see at a glance all the RTI positions here, all the colors, and I'll explain that to you in just a second how that works and show you how to automate everything. And you can see if you want to look at, here's a dragonfly that's currently open. So you could click on that and scroll down. You can see here that trade was placed on August 13, and here's the history of it so far. Everything is working fine. RTI is green. Do nothing. Just leave it alone according to the algorithm. And then here are your closed positions. If you want to look at history, you can see a total of 20 on the page, 16 winners, 4 losers, total profit and loss, so on and so forth. So you can see that a lot of times you're going to see the sold positions have many more profitable trades, and that makes a lot of sense because those are the higher probability outcomes. Anytime you buy premium, that's a lower probability trade. It's asymmetrical return possibility, but lower probability. And this is how you would look at all of the history. Now let's take a look here. How do you do all this and make it happen? You go to settings, and it's that simple. Activate risk manager, check that box. Activate profit directive, check that box, and then save your settings. So the risk manager, if any position turns red, Theta Trader will automatically process that order, submit it, and same thing with a profit directive. If anything turns blue, it will automatically submit that order for you. You do not have to watch anything. Okay, and if you also want to have an idea of how the color coding works, you can look at the glossary here, and the help file gives you all of the details on how the color coding works for the RTI. Also want to point out that you have proprietary research available. We do our daily TradeScope newsletter. So this is available to you in-house only for our clients. And we also do the daily trading summary, more of a narrative on what's happening day by day in Asia and in Europe. Any trades that were filled, so we sold condors the other day, talking about what to look ahead, Powell talking tomorrow, so on and so forth. So a lot of people look at that every day. That's our proprietary research. And you can see the simulator is available here as well. Trade Builder is available if you want to start from scratch and build your own trade. And then I'm looking at a bunch of questions coming in. So give me 1 second. Someone's asking more about, yes, we will give contact info and phone numbers in just a minute, absolutely. And someone asked from Canada, we are not allowed to work with Canadian clients unless you have a US residence, unfortunately. We'd love to, but regulations say otherwise. And then someone wanted to know about the dragonfly legs. Well, let's take a look here. Here's one we didn't look at. October week 3 expiration. We'll look at a graph. I'll expand it here, and then we'll move on to the next segment real quickly. So you can see here's this the legs here on this dragonfly. And here's what they look like. The puts have a 9.76 delta. The calls have a 6.21 delta. So it's always going to be different depending what the algo selects, depending what the expiration is. It reaches out and looks at many variables behind the scenes, so we don't have to. All right, very good. And there's other questions. I'm going to get to those in just a second. So let me show you the best feature of all. And oh, someone's asking about Bitcoin. Nope, we do not trade Bitcoin. The volume is not there. The volatility is just way too high. But let me show you the best feature of all. But first, a little humor. Hopefully you don't feel like this, too much to take in at once. Okay, we can make it easier. TradeAlerts. This is the best thing of all for Theta Trader. Here's how it works. One-touch trading. These are not the trade alerts that you're used to. These are integrated and they're live with your account. So all you do is you see an alert, you like it, you touch accept, and it's done. You don't have to log in somewhere else. You don't have to try to copy an alert from one place to another or read an email. People mess those up all the time. Oh boy, I've had in the last month probably 2 or 3 times people have called and said they have completely well, they've committed buy-sell errors on their alerts, and it's because they have to transpose everything. So here's how it works. Let me show you how it works. And of course, like any other trade, the RTI can track it automatically. You receive a text message with a link. You just simply click that link. I'll let you watch this here. Then you like it, you touch accept, and that's all you have to do. If you don't like it, you touch reject. But let me point out a couple things. First of all, you get a graph. You get a description of the trade. Okay, account number, here's the net premium you would collect, the cash required for the trade, and look at the quantity. Selling 10 of these condors, the quantity is already pre-sized to your account. Why? Because it's all integrated with your account. Theta Trader, and it's already taken into account what you have, what positions you have, and issues this trade alert for you that's specific for you and tailored for you and your account. That's what we do. You can see the days till expiration, 71, targeted annualized return. Here's the current futures quote. Just that simple. I can't tell you how reliant clients are on this and how much they love it. The proverbial, I'm flying in a plane, I'm on the golf course, I'm eating dinner, whatever, and I just touch the response. So here you go. Here we're a lot of information, but here's what you need to get started. I think you're probably ready to hear about this. It's our VIP membership. We used to do both of these things separately, but it turns out people want to do them together. So you get AV systems. We talk about the automated futures trading. Remember, you have all that R&D, system developers, thousands of system robots, US global markets, multiple sectors. You just flip the switch off or on. Everything is transparent. You're in full control. Automation with risk and profit. You have intraday or swing trading systems. You can review all your performance. You can download your history. And remember, you have global stock indices, currencies, financial markets, precious metals, energies, grains. So what about building your own system? Well, ask us how we know. It's not that easy. And it's expensive. One programmer to do one algo for one market in one system, over $10,000. So we also have the A list. That's our top system picks. You'd want to know if your systems are on that list. Here's some examples of late. We will allocate to help allocate systems for clients. So you'll want to know what systems are doing what and what we like. Value there for that research, $2,952. So you have the AV Systems platform, over $10,800 value, the A-list value of over $13,700. Now remember, you have Theta Trader as part of the VIP membership. That's the options trading solution, algo-driven solution with options trading, automation, risk and profit management. Proprietary algo will pre-build the option spreads for you. Simple and effective trade selection. Easy to track your trades. Look at that compared to this. That's what it looks like on your brokerage statement. You'll never figure that out. I can't figure it out. That's why we help. Part of the reason we did Theta Trader. And then you have the RTI. Remember, automatically will close out your trade when it turns blue or red. That's what we call autopilot and non-emotional. You just check that risk manager and profit directive box. Then you have this simulator. You can go back in time. You can have a lot of fun with that. We went through some pretty quickly, but people love using that. Use those buttons to go forward and backwards in time. So you have Theta trades, the RTI, and the simulator. Yearly value for the software of $3,588. And then the trade alerts. People can't live without their trade alerts, and that's no exaggeration. These trades come directly to you, tailored to you. They're integrated with your account. You just touch accept, and the order and the Theta Trader technology is handling the rest, and then the RTI will automatically manage your risk and reward if you've activated that. That value there for those alerts, at least $4,400. People spend a lot of money for alerts. I hear about it. I know it. I'm not making it up. And you probably are nodding your head too. So you have Theta Trader software and the trade alerts. Theta Trader alone, a value of over $8,000. So remember, with your VIP membership, you have AV Systems and Theta Trader that includes the trade alerts. And the value there, over $21,000. And here's the best part. How do you wrap this all up? How do you make it work? Well, you have a private coach, someone who's going to work by your side, an experienced and licensed trader. You'll do 1-hour screen sharing sessions. Some of the topics they might cover: system selection, activation, deactivation, A-list, system diversification. And then with Theta Trader, selecting particular Theta trades, using the RTI, trade alerts coming to you, and more advanced strategies. So you'll have these onboarding sessions as well. You have a co-pilot. You'll develop a relationship with someone. You can discuss your strategy, and that's priceless. I mean, all that experience, people here, at least 25 years of experience, $7,500 value, and that's no joke. Education everywhere. People are charging 25 grand to be coached or to coach someone. So we include all of that with your Theta Trader and your AV Systems VIP membership. So remember, AV Systems, Theta Trader, Trade Alerts, Trading Coach, a value over $29,000 for the VIP membership. And to get a little corny, yeah, there's a little more. Just remember, you have the trade scope and commentary there. We make that available to all of our clients. $2,900 for that research. The online tutorials, of course, are available. I didn't go over that, but they are there. So remember, the VIP, you have AV Systems, Theta Trader, Trade Alerts, the Trading Coach, the research, $32,000 value for the VIP membership. Here we go. We won't drag this on. 50% discount. No, we'll do a lot better than that. And remember, you can save a lot of money because I hear it. People talk to me all the time. They tell me, you mean I don't have to pay data fees? You mean I don't need that newsletter? So on and so forth. That's correct. You can save a lot of time. I can guarantee you that. And I think it's going to be the one thing that works for you. It'll be worth it for you. You can cancel a lot of subscriptions. It'll be something to lower your stress. This kid says, you betcha. And yes, people pay tens of thousands of dollars for algo systems and option trading systems and alerts. I hear it all the time. So here's the VIP offer: AV Systems and Theta Trader together. It's a live webinar. You saw my wonky eye earlier. Sorry to show you. VIP membership. We used to offer these separately at $19.97 and higher. And we'd have people lined up at the back of the room. So here's what we're going to do. Live webinar, 60% discount before Sunday night. It's only $7.97. Lifetime member, one payment. You see the link there, cf.altabest.com/VIP. No joke, folks. That's the real deal. One payment only, and there's a 30-day guarantee. So you have no risk on that membership fee. Sign up, and we think you're going to love it. And for some reason, you change your mind or life situation changes, just tell us and we'll refund the money. If it's not right for you, it's not right for you. We're not holding anyone hostage. People are here because they want to be here. And remember, this is a boutique style of service. We're not competing with any online big box brokerage firm. We're offering something completely different and unique. And I think you've seen that. So one-time payment, one time. People say, you mean it's not quarterly? It's not. No, one time. $7.97. That's our VIP offer. Now, here's some FAQs. Do I trade stock options? Nope, we specialize in options on the E-mini stock index futures. So you saw the yellow highlights. Those are the markets we're primarily trading. And you saw in part the reason why, but I'm going to show you why in more detail in just a minute. You're going to love this. Now, how about this? People ask about, they ask about tax efficiency. And my answer is, well, what if I could lower your tax rate by over 10%? Yes, we trade with tax advantaged contracts, 1256 IRS section. So your blended 60-40, your blended tax rate is 10 points lower because of 60% of the gains are taxed at the long-term capital gains rate, which is usually lower than your individual rate. So how does that work for you? Individual stocks, $100,000 account, 20% return, you'll pay $7,400 in tax. So that's a 12.6% return, okay? Now, what if you're trading with us and you're trading futures and futures options? That same result, 20% return, it's only a $5,360 tax liability, 14.64% return, tax savings of over $2,000, simply because you're tax efficient. You're trading in the right market. No more itemizing either. Remember that. Now remember, we talked about IRA. Yes, IRA available for self-directed IRAs. Benefits of the IRAs: diversify a portfolio by adding investments with a low correlation to stocks and bonds. We saw that in AV systems. The markets, these systems will trade completely non-correlated to what's happening in traditional asset classes. So everything you want to know about investing in futures with an IRA, 5 easy steps. I won't go through it all, but you just determine if you want to use your IRA, become an AltaVest VIP, you access our electronic account application, you open an IRA account with an approved custodian, and then you transfer those funds and then begin trading. But remember, past performance is never a guarantee of future results, and risk capital should be used when trading. I've talked about the E-mini. Let's dig a little deeper. Why the E-mini? Why E-mini S&P 500 options? Well, they're liquid, they're efficient, they're cost effective, and it's the biggest market. This is going to blow you away. The E-mini alone, it outtrades all ETFs around the world by over 2.5 times. So how about that? It trades more average daily dollar volume than all 6,800 ETFs around the globe. So what am I talking about? Here's the E-mini S&P compared to all the ETFs around the globe. Average daily volume in dollars is 192 billion, ETF 85 billion. So, and even compared to the SPY, people are like, oh, I'm going to do the SPY. You know, that's where the action is. Well, no, it's not. It's in the E-mini S&P 500. It trades 10 times more the average daily dollar volume than the SPY. This is where you want to be. Advantages, 5 advantages: deep liquidity. I think this number is higher actually. Yeah, that was 2019. I think it's 700,000 or 800,000 now. Average daily volume. So here's what it looks like. Average daily volume, open interest, enormous growth in this space. The largest market share. You have all the strike prices available, 100 annual expirations, so you have granularity and coverage. Now remember, we have an algorithm that has to seek out strike prices and expirations. It wouldn't work if you're trading just about any stock market options with options, stock options. It just won't work. There's just not the volume and liquidity there. You can track 1 or 2 markets, not thousands. So that's why we trade these E-minis. The margin is efficient when you're trading futures. Clear cost structure. Now, what am I talking about? Well, I will show you in just a second. But remember, superior execution. ES options offer a cost savings of $4 to $15 per contract, according to the CME Group in a study they did. That means your bid-offer spread is tight. And there are no hidden costs when trading E-minis or futures options. These are not securities. They trade at the CME Group on the electronic exchange, the Globex market. Every order is going through that one exchange, they all get treated equally. There's no payment for order flow nonsense. And what am I talking about? Hidden cost here. Robinhood makes millions selling out millennial customers to high frequency traders. They make millions of dollars in cash income. They sell customer orders to the high frequency trading meat grinder. High frequency traders are not charities. The only reason they pay Robinhood tens to hundreds of millions of dollars is that they can exploit the retail customers. So think about that. Doesn't mean you can't ever trade stocks. It just means it's not free. So Robinhood made 100 million just by selling their order flow in the first quarter. HFT dominates. Most people don't talk about it. It's a fabric of the market. Everybody's making money off the way the system is built. No one will change it. They may not charge you for the trade, but they make money off the spread. I think we all know how that works. It's Tinder for money. That was kind of funny. And there's no such thing as a free lunch. So it says here, retail stock brokerages are not charities. They make up lost commission revenue in other ways, buried down in the guts of their workflow processes where few people notice. Okay? I think I'm making the point. I don't want to bang on that drum too much, but nothing of value is truly ever free. I think that's kind of the point that a lot of these people are making. If you think you're trading free with stocks, you're not. Doesn't mean you shouldn't trade stocks. It's just not free. And how much are you paying? You'll never know. It's buried. Now with us, people want to know what our commission rates here are. And it's pure and simple. It's 5.25 round turn all in. Very competitive in the futures option space. If you go to the big box brokerages, some will be lower, some will be higher. And I'll give you an example. I looked and one big brokerage says they are $2.25, but you read the little asterisks there, little star, and it says that's per side. And then you read all the fine print, they have to add fees on top, clearing and exchange fees, and the total ends up being higher than what we charge. So remember, we're not even competing with them on price anyway. We have something totally different and unique, but ultimately our rates are competitive and all of our performance is net. All performance is net of trading cost. So keep that in mind too. And people ask, what is the performance of Theta Trader? Well, it's up to the person using it. So everyone's self-directed using it. We're not managing the money. What size of account for an AltaVest VIP? Well, we think you should have $50,000 to $100,000 split equally between Theta Trader and OB Systems. That's probably a good minimum amount. Now, how about a free VIP membership? Yes, $100,000 account. You start trading with us, we'll gladly refund that membership fee. I've done 2 today, and I'm glad to do it. No trouble. Now, here's another thing. Sometimes people ask, I'm pretty self-reliant. I know all about options. I know all about future systems. I just want to get set loose. I don't want to talk to anyone. Okay, free membership here for self-reliant traders. It's our pro membership. There's the link, cf.altavest.com/AV Pro. And it's everything except the coaching available. So if you don't want to talk to anyone, that's fine. And we understand. And you can become a member at no cost. And remember, trading account types. People always ask, here we are, IRA, individual, joint, corporate, LLC, trust, you name it. And just to wrap it up, why alternatives? They may improve diversification and lower portfolio risk. And I do see a lot of questions coming in, so let me get to those in just a second. I know you've been with me a while. And growth, they improve the risk return profile. They may help grow an investor's total return. And speaking of growth, so what's next for the stock market? How about a few final thoughts? Put call ratio. If you can see this here, it's the lowest in history. What does that mean? Nobody's buying puts. Nobody thinks the market's going to drop. Nobody is buying puts. Think about that. That's a really, really strong contrarian indicator. At some point, this market's going to have a nice correction. Of course, doesn't really do any good to just say it over and over like a broken clock, but that is interesting. Election year, seasonality. So the election year is the blue line. So through August, September, maybe a little bit higher through September, and then a drop, quite a big drop into early or late October, according to election year seasonality. S&P 500 versus corporate profits. This is crazy. I think it's even higher now. This is from last quarter. So the S&P is soaring and corporate profits are just completely tanking. Biggest, largest divergence ever. S&P forward PE earnings, or forward PE, near its highest since 2000. So that's, at some point, it's not going to end well. I'm not going to try to suggest you shouldn't be long ever, but anyway, here's the Buffett indicator, the Wilshire 5000. So the total stock market versus ratio over GDP, never been higher. This is interesting. U.S. equity market concentration has surged. So the 10 largest companies in the S&P 500 now make up almost, well, 30% of the S&P 500. The 5 largest are 23. I think it's a little higher now, 25%. And what are those companies? Well, you know, the mega caps. Look at that. These are the top 5 mega caps in the S&P over a quarter. So here they are, you know, Facebook, Amazon, Netflix, Google, Microsoft, Apple, Nvidia, that type of thing. So market has very low breadth. And look at the timing too. Historically speaking, this is how long it took the S&P 500 to recover after a greater than 30% decline. So you can see in a number of trading days. So we've done it in, I don't know, what, 100 trading days? Isn't that crazy, that red line? Otherwise, I think the quickest was something like 700, would it be 2 years? So anyway, this is all unprecedented for sure. Leon Cooperman, I actually ran into him at a conference. Nice man. Stock picker, very successful, Omega hedge fund. He made billions of dollars. He said their Fed has created a speculative bubble. He's talking a bit about stock splits. This is kind of funny. He says, well, the last time I checked, if someone gave me 5 singles for a $5 bill, that did not create any wealth. So, you know, Apple splits and all of a sudden their stock soars at more. Doesn't really make any sense, but that's what's happening. Chairman Powell tomorrow should make a profoundly consequential speech on the Fed and how they view inflation. Be interesting. Speaking of the Fed balance sheet, basically money printing. Look at this ramp up here. It's almost like an asymptote line, right? Remember that from calculus and all those days? Straight up. So here's this cartoon. I've been using this a while. Blowing bubbles, federal monetary policy. And trading stocks or buying stocks, he's suggesting here you should have at least a 10-year time horizon. Congressional Budget Office says it's going to take a decade to recover from at least the economy, maybe not stocks. And this is a great cartoon. I'm long delusions, wishful thinking, and fear of missing out. And remember, what we're doing has a low correlation to traditional assets. So that's why we like it. We think your portfolio should not be this or that, but we think it should look like this to have a piece of that pie allocated to alternatives such as the VIP membership. So we think it's the answer for automated systems and options trading. So to wrap it up with the VIP membership, you get AV Systems, Theta Trader, and the personal coaching. There's the link, cf.altivest.com/VIP, and there is our phone number, 949-236-6961. And then a pro membership, if you're self-reliant, you want to use all the tools, but you don't need to chat with us, cf.altivest.com/AV Pro. We'd love to have you as part of our winning team if you're long-term serious about your success. And there we have it. And I'm going to run through the some of these questions. Boy, there's a lot of questions, but I think I was able to get through a lot of those in the FAQs. Yeah, it's all web-based, so you don't need to have a PC or a Mac or whatever, so everything can work all web-based. And monthly license fee on AV Systems. Yes, the license fee is per contract or per unit. So if it's $50 a month to trade a particular system with 1 unit, it would be $100 to trade with 2 units. But you do get volume discounts or breakpoints, I think, depending on the developer. If someone wanted to, we have people doing that actually. If they're doing 5 or 10 units of a system, they get a big discount. And people wants to know, are we a brokerage? Yeah, Altivest is a brokerage firm. So you open an account with us And once you have that account with us, then you can then trade with the AV Systems or Theta Trader. And let's see, someone's asking P&L, can you show the investment? I'm not sure what that's referring to, but on the AV Systems platform, the two items are suggested capital and required capital, and all the performance number is based on the suggested capital amount, and that can vary from maybe 5,000 to maybe even 100,000 per system. I'd say the sweet spot is maybe 5 to 20,000 per system. And yeah, the one market that you should be trading, absolutely. You saw the E-mini S&P 500. That's where the action is. And I'm not sure, someone asked about Ninja Trader. I'm not familiar with what they're doing. And yes, you do get a recording sent to you. And absolutely, you have the VIP membership. You have a coach available to you for teaching and support. And someone asked again about Bitcoin. You could trade Bitcoin futures, but not with Theta Trader. You would not be trading options with Bitcoin. That would be kind of, I think, a bit suicidal. Minimum starting balance, we talked about that. We suggest 50 to 100,000 for the VIP membership. And live trading results for Theta Trader. Well, no, the Theta Trader demo I did was just a demo account, and everyone using it has different trading results. So there's no live results, so to speak. And we are the broker. Yes, Altivest is the broker, and we'd love to work with you in Canada. And of course, fortunately, we can't. And I think we talked about the Dragonfly again. Yep, you can definitely give us a phone call. You saw the phone number there, right there on the screen. And what else is there? Someone's asking about prevent pattern day trader flag. I'm not sure what that's referring to. And the commissions are 5 1/4 for the E-mini options, 5 1/4, and that's up. That's round turn. That's basically total. That's all in. So you pay 5 1/4 for your option. That's it. That includes every other thing. And you still pay 95 for a trade. I'm not sure what that means. No. And we clear through RJ O'Brien. And yes, you would have to open an account with us. And I think I talked about the commissions. And the commissions in Theta Trader are 5 1/4. And in AV Systems, it just depends on the market. So you'd have to look. But remember, all of the results in AV Systems and Theta Trader, all the calculations, everything is net of all trading costs. And yes, you can trade within an IRA, absolutely. And yes, you may trade with a qualified 401k, absolutely. And no, there are no data fees. And we are the brokerage firm. Yes, we are a brokerage firm, and you'd have to have a brokerage account with us here at Altivest. And absolutely, we'll send that recording out to you. If someone says they have $15,000, I would suggest the Pro account. If you're quite self-reliant, you could still do that, but you would be a little bit limited into regarding the systems that you'd be able to trade. So yeah, that's why we suggest 50 to 100,000. Missing the first 20 minutes. Yes, you'll see the recording. And let's see here. What are other costs? No, there's no other cost for other costs besides commissions. Well, if you're doing AV Systems, you have to license each particular system that you're trading, and that can vary in price from, I don't know, $10, $20 to maybe $50 or $100 per system. It just depends. And yet we clear through RJ O'Brien. And the VIP membership fee of $7.97 is lifetime member. Lifetime member. And yeah, we couldn't work with a $10,000 account with the VIP, but certainly you could trade. You'd probably be limited to what you could do. I wouldn't recommend 10,000. And let's see here, 5.25 round turn. Yes. So that's total. That's the total cost when you trade an option. And so Theta Trader, 90 per month per unit percent. No, AV Systems is the automated futures trading system. And if you choose a particular system, there's a license cost associated with each system, and it will vary. But if you're trading with Theta Trader, there's no additional licensing fees or anything like that. And the benefits of the Pro, well, you get to use all of the software platforms and the automation features and the trade alerts and all that. You just don't have a personal trading coach. No, we are the brokerage firm, so you cannot use your own brokerage. This is all of our technology that we've developed. And it may be available for non-US residents. It just depends on where you're located. We can't work with Canadians or with the EU. So you'd have to ask us specifically where you are. And in terms of information on the Pro, uh, it's all the same thing we just talked about. It's just, you just wouldn't have access to a trading coach. That's all. You could use all the software, the Theta Trader software, the AV Systems platform. It's not to mean that we won't respond to you. It's just you just wouldn't have access to all the training and the screen sharing and the coaching and all the lessons and the training. Wow, very good. Lots of great questions. And I see, yes, the only difference is the coaching. Correct. That is right. And yeah, thanks a lot, everyone, for all the questions. And let's see, what else can I do? I will do this. Let's see if I can, we'll leave the phone number there just to make sure it's in there. But quite frankly, most people are just, there we go. Most people are just going to the links and that way. And that will do it, folks. So thanks again. And yeah, we'll get the, excuse me, if you've missed anything, you have to see it. There is a recording, or in the meantime, you can call us or simply just go sign up for the VIP membership if that's what you're after. And people love it. There's a lot of value there, a lot of technology, excuse me, a lot of technology and access to trading that you would really never otherwise be able to do very easily, at least on your own. So use our experience, use all of our effort, use the tools that we've created, and that'll wrap it up. So thanks a lot, folks. Everyone stay well, and you've got our phone number, you've got our links there, and we'd love to hear from you. And remember, 30-day guarantee as well. So we'll wrap it up. I better get going myself, and we'll talk to you soon. Bye-bye. Oh, one more. Yeah, someone said 25,000. Yeah, you can do 25,000 on the Pro. Oh, also, there's a survey. I'd love to get your thoughts on the survey. If you fill that out, good, bad, or otherwise, I need to hear it. I need to know how to improve. So once we wrap this up and close it up, you'll get a chance to fill out a brief survey. I mean, take you, I mean, really 30 seconds. So I'd love to get your thoughts. Thanks.